So I'm going live here on YouTube only, not on TikTok. Hopefully you guys are seeing this. If not, good news, it'll be recorded. You can watch it back. So again, I do the TikTok just to kind of throw the extra out there. That's not our main platform that we do this. It is YouTube as well as on our website. So what I want to do in the morning huddle is I want to talk a little bit about what I put out on the market insights as well as kind of what I see today. Why we had the pump yesterday, why we had the rejection where we did yesterday. I mean, it was a pretty wild movement up and down. So first, let's just talk about a little bit the way yesterday went. So when we come into this area here, we all know we talked about the fact that we were very bearish in the pre-market. A lot of the times when you get this push like this, the US will come in and begin to start buying or potentially buying, right? And so you can see market open. We had a very strong candle came through, did create that lower low, but you notice that we started to get the buyers popping in, and bam, there was our signal that the US was very interested in reversing this. And so once we have this kind of slow trickle down and we have this kind of volume step up from there, it just created the FOMO. We did flip the 200 on the 5-minute. We got the retest of support, and from there it was just FOMO. Then you have the market makers and the hedge funds kicking in and saying, hey, we got a prior high right here where it was a pretty nasty rejection all the way back down to 31. Everybody pushing it up like this. Let's take some profit and dump it on them. And that's what happens. So we had that very wild oscillation. We did find some support pretty early, though, considering where we had opened up at. And so that continued to try to find some support this way. Couldn't do it. Market closed, and we just kind of bled last night through the night. And you can see now we're actually testing this lower trend line. We did get that death cross again. We are below that 200. We are showing a little bit of a bullish gap fill, so there might be another potential reversal similar to what we had here today. Some key areas that I'm going to be watching is going to be this trend line. So this trend line right here is going to be, I believe, pretty huge, because if you take this and you extend this out, right, we've seen this on the training days on the lower patterns. You can see as we pull back like this, we have the longer run is up. We have our lower high and we have our higher low. So it's creating somewhat of a possible bullish pennant. And that's what we want to watch for. So although we're looking pretty bearish opening today, this trend line is gonna be the big tell today, right? So if we break this trend line, it's likely that we're gonna be pulling back at least to 432.47. If not, probably to retest this 430.52. The interesting thing to me, if you go to the 1 hour, what I'm really watching is we do have somewhat of a double top here, and we have a larger double top going on. So if we do push back down to that 430 range, that is going to put us below this 200, just like we were here. If there's enough steam to push us past, right, and we do break that 430, I mean, bam, back down to 420 we go. So lot of room to go down, around $14. You can see that the 1 hour has drawn this as a heavy resistance between 435 and 436.5. And it's just continuing to act as resistance as such. So we'll see how this line goes, right? If this pattern though can hold and we do reverse it like we did yesterday and shoot back up, we're getting into a break of a potential bullish pennant, which could be what propels us into that higher 440 range. So it's a pretty wide spread today, guys. I mean, we have 10 up that we can go. We have 10 to 14 down that we can go. Not necessarily today, but gives you that idea of that direction. So this is the lines I would watch here if we break below this. Now keep in mind this could be a little bit of a fake out here, because again, on the 1 hour, the 200 is 432.72. So we could get a wick down and a possible recovery back into this, which would be seen as bullish. So don't get faked out on that. We do have the divergence here that is obviously starting to play out right in front of us. So that's definitely something to watch too. So that's kind of my main points I wanted to talk about there. Let's talk about the VIX real quick. As we come into the VIX, you can see we had our pump, we had our dump. came across here yesterday. You can see the market, the VIX dumped, and then it basically recovered off of the prior support. This was also another good sign to tell you that the markets were going to pump off of this resistance. It showed short. We did flip long, and the markets dumped because of it. So VIX is currently climbing right now, attempting to break through the resistance. It can get as high as this level here. Anything up in this area here, you want to be very careful on taking your puts, because you know that in the past it has reversed pretty heavily on us, which would, remember, this is down, market goes up, this is up, market goes down. So that's kind of where we're at with the VIX and just kind of overall what I see there. If you look at the dollar, we can see if that corresponds. The dollar, interesting enough to me, the first thing that stood out is we do have our kind of pull, and we have our bull flag potential forming here. You can see if I were to draw a line here, let's go ahead and delete this one, and we'll just draw it out, right? So if you draw the line like this, and you draw the line like this, right, we have that falling channel that it's attempting to break out of. So if this can break out of this is going to push up. It's going to drive the markets further south. However, if it fails here, it's going to drop back down here, meaning that the flag's not ready to play out yet. And this could play all the way down to this level here, right? So these are some key areas to watch. Again, this is inverse. Now, if you look here, we do have heavy resistance there. Couldn't hold it through here, rejected there, couldn't even make it there, right? So as it gets up to here, you want to look for that possible rejection again, which would push us north again. So that's kind of the breakdown between those. If you're trading crypto, let's talk about that. We had the crazy wick and then the pullback. I think the push north here is just people hoping that this wick meant something. I will be very cautious on my longs on that. You can see here all the way from pretty much there, we have non-stop bearish divergence, non-stop. So looking potentially bearish on the Bitcoin side of it. You do have a prior high here that it can't really break and hold. The key level, guys, on this one for me, if you're trading in any kind of crypto, is Bitcoin needs to break back into this zone here where it held support for so long. Because then that way we can have a support, a breakdown, a range, right? Public participation back up, hold support. If we can hold support above that 28.8, then we're gonna come up and create that higher high there. I know this was kind of like a fake out wick, but you can almost just take this wick here and that wick there. And if we hold this as support, this would be the next break up before the rejection. So that is my thoughts on that one. If you guys are in doing the live trader, this is our new levels. I did set these ranges out. If you would refer to the pictures, I have these based on these levels and just kind of what I see and where I think we're going to go from there. So let's talk about the market insights briefly. So if you go to the SPY market update, you click there. We have the key level. I try to make this super easy for you to read. Just a little good morning, a little bit about the market mood, right? So when I talk about market mood, I'm going to put little keynotes, like notice the slow shift to bearish. So if you remember, in the last few days, we had like 3 days in a row that was full bullish. Then we had a couple bearish start to shift in. Then we had a couple more. Now we're a little bit more bearish. Now there's still some potential bullishness there, but the overall market sentiment is changing to that potential bearish. Now, again, these are current contracts. They're not my analysis or TA. This is raw data from the brokerage saying most traders have contracts that are open that are more bearish than bullish. But there is some that are showing days like today or back on the 23rd that they believe that we might flip to bullish. Now, these dates are based off of the contract days. So example, this one might say most 0-day contracts left in here are still bullish, right? Contracts that expire for today, which might be a reason why we might flip a little bit bearish because they want to wreck those contracts. So, but you can see tomorrow we have a little bit more bearish, right? You can also utilize the volatility. If you don't understand what the volatility and the ratio means, please go back to yesterday's huddle, and I have a description on there on what that means. So now that we have that kind of in mind, that hey, there might be a shift to potential bearish on the market, let's look at the levels. You can see that the resistance levels are pretty high, actually, considering where the price is. It's almost $4 away. Whereas here, we're only about maybe $1 to $2 away. And so it kind of tells you that, you know, we have some earlier support that we might catch, and there's plenty of room to run north. It doesn't mean we're going to do it right now, but it's starting to spread, right? So this will be your crucial number. If you're below this, you want to just kind of scalp those puts. If you're above that, you want to scalp those calls. Max pain targets, these are slowly shifting, which is fine. I'm finding kind of interesting because we were in the 20s. Now we're kind of holding pretty steady above the 430 range. Most of them kind of averages between 432 and kind of 436, you can see. So you can see right now, I mean, we're at 434 or so, 433.87. I mean, we're literally right in that middle zone. So they're hitting their max pain right now. So we're in that area where we may range to just kind of bleed some of these out. And this is where you want to rely on the EMAs. You want to rely on the patterns that you see to identify those breakouts. So I put on here, you can talk about, you know, looking at the chart below, we'll see a very bearish day today if we break below this line. This is the line I was talking about, which we're literally right at. So it's literally right there. So if we do break this, I believe we're going to have a continued bleed, possibly down to this 200 EMA to have that potential retest. So I want to see if we're going to get a big bounce to see if this trend line and this pattern might hold. It's not looking very strong right now, but again, we reversed that yesterday too. So we don't want to get overly bearish or overly bullish. So again, you know, just rely on what you see. The markets can shift. We can think that we're bullish, and all of a sudden, bam, you know, the TA shifts throughout the day, and now we're bearish, or vice versa. Here's the settings that I put out for the live trader. Hope you guys are still utilizing that. I believe it's been quite some time since we've had a red day from the live trader. So yesterday we had some wild ones that looked like they were going to get stuck. We did get out of that call before it dropped, which was awesome. I purposely set that range a little lower because I was anticipating we would get maybe a little higher than we did, but I'm glad that we had set that a little lower, like I was planning, so to give us plenty of room to get out of it. So awesome job yesterday, guys. Again, today I just wanted to go more again over the insights. The whole purpose of the huddle is to kind of get you prepared for the day and how to read these insights. Again, you know, we're just going to stick close to the charts here, and let's just take a look. You can see we're trying to fight this line already. So should be an interesting day. My anticipation, we'll see how the market opens with the news and such, but we have a big day tomorrow with the Powell speaking. So usually the day before there's going to be some trap moves. They've already trapped a bunch of people up here. Wouldn't surprise me if we don't drop down in a decent way today and then have a quick rebound to trap people there for that Thursday. That's how they open up the liquidity. We are going to do some live trading in the room, so if you're watching this live, hopefully you guys join 9:15. But that is all I have for today's kind of huddle. Again, last thing I'm going to just touch on, just a reminder, is if you are not using it, go to Trading ATA. This thing is amazing. I used it yesterday a little bit, and we have created the button where you can create the trade. Go in here, you have your descriptions, you can choose your symbols. Mostly people are doing the SPY. Choose your volume, choose your direction. The strike price will automatically calculate for you. And you can see that this is the days as far as strike price goes. So pretty awesome stuff. So I will see you guys in the room, and let's have a great day of trading.